In working capital, what we are going to do is we are going to understand what is the meaning of working capital, how the working capital makes impact on financing decisions, how the working capital is effective and it is utilized for managing every activity. So when I'm talking about working capital, basically I'm understanding how the actually the production cycle works because working capital is associated with various options and operations which deals with a flow of business. So this is the fourth unit of your syllabus. We already covered the fifth unit. Now we are dealing with the last fourth unit and we'll make sure that your syllabus will be over by 22. So what I suggest, till whatever the units we have covered in advanced financial management, please go through that unit, read that units and understand where your issues and then you can talk to me. In advanced financial management, 60% numericals are there and 40% theory expected. So you cannot keep numericals as option. So start practicing numericals of advanced financial management. So let's understand what is meaning of working capital, its cycle, advantage, limitation, and its application. So what is working capital? Working capital is defined as the difference between current assets and current liabilities, where I will have the funds which are available for my operation. So when I'm involved in production, what I'll do, I will have raw material. It is used in a company. So I have man, machine, labor, capital, and method. Then I will produce the goods. And these goods are sold in market. So from raw material till the final goods, that means initially I pay to my creditors and then my debtors will pay me back. So this whole duration is called as my operating cycle or whole duration from purchase of goods till sale of goods called as my working capital cycle. So how I manage this cycle? It will give me more profitability. Suppose I required production 10 days. I required production 2 months and I required production is 1 year. So what it indicates that if it is 10 months, sorry, 10 days, I can produce a goods in 10 days. If it is 2 months, then in a year, only six things I can produce. If it is one, then I can produce only one. So if I'm unable to produce more, then my profit question will be challenged because if the production is less, the profit will be also less. So working capital understanding is more important because this is going to affect my production planning. As the basics, we can claim working capital is a difference between my current assets and my current liability. As per this, if I require to do a production, what are the things I required? Land, labor, capital, machine, method, and how I'm going to finance them. When I study, I'm going to study the working capital cycle. And when this working capital cycle I'm studying finance, it is called as working capital analysis. Working capital concept is a short-term concept. It is not relatively long-term concept. In this concept, company's funds required for its operation, I'm going to study. I'm going to analyze what is the cycle, what are the different components, how I can improve the cycle, and how I can ensure that the company has optimum working capital. The formula for working capital is current assets minus current liability. Now, if you require explanation about current assets, let me know. I'm going to explain in another PPT the current assets and its effect and management. But for time being, I'm just using the terms current asset and current liability. Suppose I have 1 lakh current assets and 30,000 is my liability. It means I have inventory, I have cash, I have bank, I have debtors of 1 lakh rupees, and I require to pay immediately 30,000 for my working. Then, after paying liabilities, the 70,000 will be the funds I can use for my production cycle. So, if my current assets are more than my current liability, then I will get positive answer. But if suppose my liability is 1 lakh and asset is 30,000, then this will be minus 70,000. So the positive working capital indicates healthy liquidity and ability to meet the obligation, whereas negative working capital suggests financial stress. So it means if my assets are more than my liabilities, current assets I'm talking, then I can easily honor my payments. But if my current assets are short than my current liability, I cannot pay my due amounts. If you give a practical example, suppose you are doing a monthly budget, your monthly budget is 10,000 and you're spending 50,000. So it means 40,000 is excess funds. So whatever excess, you need to borrow from somebody or take the loan. So in that case, you are under financial distress and you need to take care of your management. लेकिन उल्टा होता है कि if you have to spend 10,000 and you have 50,000, then you can use that money for saving or investment. So for any company, you should have working capital positive. And the formula for working capital calculation is current assets minus current liabilities. Now, what are the components of working capital? On broader level, we have said it is different between current liabilities and current assets. So what are the parts we covered under current assets and current liabilities? It is my working capital. So first is the cash and cash equivalents. The company has three types of cash. One, bank account, second, petty cash, and third is recurring cash. All these clubbed together form a part of cash. So when I say cash and cash equivalents, it talks about plastic money, near money, bank, or petty cash, whatever available funds for me. Then if any buyer has taken the goods on debit note, it is called account receivable. So account receivable is nothing but we can say equivalence to the cash. So these also recognized as current assets and they are being classified and used for calculation of working capital. Inventory and stock holding involves three types. One, raw material. Second, the work in progress. And third, finished goods. Okay, one more is there, but which is not core part, is called scrap. Normally, scrap is not considered as holding, but again, it's a type of inventory. Scrap can be considered as a wastage or so on. Then, if Instead of 3 months, I pay for 12 months. So 9 months if I pay anything advance, or if I invest or I deposit, then these investments are recognized as current assets. Now let's talk about current liability. Current liability first is accounts payable. Like account receivable, if I have purchased goods on credit, then it's account receivable. Any short-term assurance, loan, or obligation, if I have, that will be called as a current liability. For example, bank overdraft, it's a part of my current liability. Short-term loan from bank or any other authority, it's a part of my current liability. Then the tax liability and any provisions, they are part of my current liability. Let- Please remember, these provisions are normally part of my current liability, but while calculating the working capital, I need to adjust these provisions because provisions are cannot be said expenses. They are just denoting the management of funds for future loss and investments. So please read the details of current asset liability. If any doubts, I can re-explain. Since no doubt, I will further proceed. For any balance sheet, the illustration of working capital is not mandatory, but the figures of balance sheet are referred for calculating of working capital analysis. We calculate current assets and current liabilities, and then we analyze what is working capital, whether it's a positive or negative, and based on that, we take a call about company's financial position. Now let's understand what is working capital cycle. Please remember, if theory question is asked, they will focus on this concept, that is what is working capital cycle and what are source and application of funds which we can use for working capital. So working capital cycle is operational flow where raw material to finished goods, a cycle of operations is managed, and we normally apply the funds. So how a production cycle and financing and application of funds is done is nothing but a working capital cycle. Shorter the cycle, it is a better. If the cycle is longer, then I'm unnecessarily locking my funds. So duration is most important. If less funds and short period, then the working capital cycle is called effective. But if more funds are applied and duration is larger, then in this case, the working capital is weak and it is not in favor of organization. So I need to have short working capital cycle with less amount required. Now, what are the stages of working capital cycle? First, I will purchase raw material. I will complete production. That is, I convert material into finished products. Then I proceed for sales and collection, and then payment of cycle. So, let me show you the working capital cycle diagram. So, if you can see, this is called a short illustration of working capital cycle. It is a continuous activity that I will first have raw material. So I will purchase this raw material. This raw material is issued for production. I will do the manufacturing and I will generate three things: work in progress, scrap, and finished goods. Whatever the finished goods and whatever the scrap, they are further proceed for sales purpose. And I will sell finished goods and scrap. So the people who will buy the finished goods is called debtors. And once the duration over, this debtor will pay me via bank or cash. Once I receive cash, what I will do is I will do the payment to my suppliers. So this is the continuous cycle. I cannot say this is number one stage or this is number one stage. It is a continuous cycle and it has cyclic movement from cash to suppliers, then manufacturing, then sales, then debtor, and so on. So it is like a cycle. It is going to be a continuous activity. And that's why it is called as working capital cycle. Please see the diagram. If anything you want, I should repeat explanation. Please let me know. No doubts. So let me further proceed with PPT again. So we have seen inventory, then production, then sales, and then payment. So if I show it diagrammatically, then I will first purchase the thing, then I will do the production. After production, I will go for sale. The sales will have cash sale and credit sale. The cash sale will immediately pay me. the credit sale will create debtors. These debtors will pay me cash, and then I will pay to my suppliers. In sale, if it is a cash sale, they will directly pay me here. They will not follow this step. But if I assume this is my cycle where the chain of movements is continuously moving, and that's why it is called as working capital cycle. Now, why the length of working capital is important? Because the shorter cycle always gives more liquidity. When the cycle is short, let me show the illustration. Suppose your working capital is of short period, and if your working capital is of long period. So when it is short period, then cash, creditors, sale, and debtors, they are shorter. Suppose 1 day, or we can take 2 days. But if it is like 7 days, 3 months, 6 months, then comparatively, my funds are locked for more period. So, as per experts, if I have shorter cycle, it will help me more liquidity and depend on duration. I can also avoid dependency on external source of finance. So, if I have short cycle, it will give me ability of cash quick and lower operational needs because funds are available for my operations. So as per this, I need to ensure my working capital maximum short term. But if it is a long, then I need to have borrowings because I'm not able to use my own money because it is locked with my debtors and creditors. So in this case, I will be issues about cash. Second, when my working capital cycle is larger, then in such case, it might be inviting frauds and errors and mistakes. So it is a business risk I'm taking if the working capital cycle is too long. Most important, if my cycle is long, it means cash conversion of final product is late, and this late conversion will result in financial distress and managing my creditors. Because suppliers always interested for quick payments, and if I am unable to honor the quick payments, then they will not be happy and in good relation with organization. And hence, I need to ensure shorter working capital cycle and its better management so that the funds for operations are effectively used and applied. Now, what is the advantage of working capital? Working capital consists of debtors, creditors, production, and cash management. So indirectly, it will help me to optimize my output. It will help me to optimize my implementation of operational efficiency, smoother functioning because I'm already planned my activities. I already find out source of finance. I already planned how I'm going to invest and where I'm going to invest. So allocation of funds is optimum. Since allocation of funds is optimum, I can achieve the financial buffer and growth, which is not feasible if I not plan the activity. So indirectly, when I'm doing planning for working capital, I'm positively thinking of operational efficiency and better cash management. Now, if I give the real world example, suppose it's your birthday and you're going to make a party. So if you decide that tomorrow you have to give the party and today you are going with the planning, then normally these plans are financial distress because you are very uncertain about the activities. But if you plan at least a week or 2 weeks before, then you can book the hotel, you can book the cake, you can plan your return gifts and so on. So if your planning is good, it will help the strategic relevance and reference to you. When retailers are planning for festive seasons like Diwali, Dasera, Ganpati, or New Year, they need to think about what will be the people choice. And based on that people choice, they have to prefer what stock they require to make. And they can plan their production, they can plan their sale, and they can plan their marketing schemes. So considering this, if they are managing their working capital short term and in planned way, they can efficiently schedule production and conversion of cash. Please read this slide, then I'll continue. Any doubt? So let's move further. What are limitation and risk of working capital? Working capital is a tool where I'm controlling flow of my inventory, flow of my cash, my production cycles. So it involves multiple departments. So when it involves multiple departments, it involves a little complex structure. Most of the time, it is observed that working capital is focused on two things. One, inventory management, and second, management of flow of money. This concept i- ignores the opportunity cost and cost of marginal utility. So, as per this, I'm only talking about inventory efficiency. Maximum inventory is available for production, creating maximum output. It always beneficial. This working capital emphasize that I should reduce use of inventory and locking of funds in inventory. It promotes I should follow the just-in-time or backward integration of inventory cycle so that the planning of production process is effective. As per working capital management, overcapitalization or undercapitalization may result in poor or breakdown of my operation, and that will create more expenses and more problem to the organization. So, when I'm planning some activity, I should avoid excessive use of inventory and under or over utilization of capital. Now, what are the risks associated? There are certain risks which are associated with working capital. Normally, I cannot say the risk. I can say if I'm poor managing the assets, then they happens. If I'm not managing working capital properly, then I have risk of not able to pay my short-term obligations. Since I have not planned my activity, I may be paying the funds as and when required and where, then my funds will become costly because In urgency, I need to borrow from the sources where the source of fund is heavily cost. Second, if I'm not managing my funds application, even though I'm progressing, my funds are locked in something called as inventory. So unsold inventory always create a risk and loss. This also issues as unfavorable in case of liquidation process because uh, stock of goods may be finished unfinished if I'm holding for longer period. Then in that case it will result in unfavorable position. Most important, if I ignore the working capital, I am losing the trust of suppliers because they are not getting the payments. If the suppliers are not sure about payments, then the trade discounts and cash discount are not received. And I'm taking as stance my flow of money through debtors and creditors. Please read this slide. If in doubt, ask me in chat box. No doubts about risk of negative working capital. Let's move further. Let's talk about balancing act of profitability and liquidity. For any effective working capital management, a person should ensure that he should have adequate liquidity and he should also go with profitability. If I focus on liquidity and keep the maximum money with me, then on long run, it is just wastage of funds. And in case if I invest more and inventory part is reduced, then I'm compromising on liquidity. When these two together works well, then I have optimum balancing where I'm earning profit as well as trust of buyers and sellers. Indirectly, I'm approaching towards optimum working capital structure. Now, what are practical applications of working capital management? I'll wait for 2 minutes. Please read the slide, then I'll explain you. So, if I'm managing working capital, it is more effective and more profitable because these are the core components of any working capital. How I manage my debtors, how I manage my creditors, and how I control my inventory will make effect on my cash. And if my cash management is best, then my working capital will be performing effectively. As per principles of working capital, debtor is paying in 2 months. I try to pay creditors more than 2 months because the difference between debtors and creditors is correlated use for cash management. Whereas if ulta, the debtors will pay in 3 months and creditors are paying 2 months, then the cash I require to pay back. Then I require short-term borrowings. Similarly, when inventory control is proper, I require less inventory. When I require less inventory, the more funds are available for cash. But if inventory goes on increasing, I need to pay for inventory. So account receivable, account payable, and inventory. How I'm going to manage that will make an impact for inventory control and cash. So if I'm managing these all things, I need to ensure that it is oriented towards profitability. So in conclusion, working capital is one of the most important component of financial management where I need to ensure the flow of money for various productive activities or operational completions in shorter and smarter way, maximum internal fund generation, it's a better, and I have to see that my each step is properly planned and executed to avoid financial stress or my financial management of organization. So this is about introduction of working capital. Now we'll first talk about trends in working capital. Before that, I will just illustrate management of current assets. So in working capital, it is most important to understand the determination of levels of current assets. So let's talk what involved in that. Current assets are short-term assets which are less than 1 year or less than one operating cycle. They play a crucial role in determination of liquidity and payment of short-term obligations. If I have more funds available, then I can easily pay my short-term obligations and I would have positive working capital. If my current assets are shorter, it always indicates poor fund allocation and limitation towards my working capital management. Now, what are the components of current assets? Because this is covered so many times, so I'll wait for 2 3 minutes. Please read the slide. I'll explain after reading, and any doubt after explanation, you can post in chat box. So I'm waiting for 2 3 minutes. So the first is cash and cash equivalent. It involves short-term cash assets, which are called as cash and cash equivalent. The example is treasury bill, money market funds, demand deposits, and immediate cash. The treasury bills are government bills which can be easily redeemed with government treasury and we can collect the cash. The money market funds are the instruments which I can sold overnight in money market and generate my available cash. The demand deposits are nothing but deposits which I can just endorse and collect the cash. Then the second components of working capital is marketable securities. Now, what is marketable securities? The short-term investment, which are more quick and liquid in nature, are called marketable securities. Then account receivable is bills receivable, which is assurance given by my debtors for payment of their purchase. And most important, inventory. Inventory is goods. It is classified into raw material, work in progress, finished goods, and scrap for sale. And last part is prepaid expenses. These are the expenses which are being paid by me in advance before the period of due or before due date. These always consider as asset because I have involved payment of cash before due date. So these are various components of current assets. So I'm going further. Now, how the valuation of assets is done? We have to first rank the assets as per liquidity. Second, we have to rank these assets as per their amount of funds. And then we will do the ranking of assets as per our convenience when we can able to raise the funds for payment of my current liability. Now, why valuation of current assets is important? Because current assets is internal source of financing working capital. If my record keeping and analyzing current assets is good, then I'm able to manage my working capital. But if my estimation and compliance about current assets is poor, then recognition of current assets will be in question and it will not be in favorable situation for any organization. So I need to control the current assets. So let's talk about different levels of current assets I need to maintain. So in trade-off, now trade-off means the gap between two things. Trade-off indicates the differentiation between two things. So when it's a trade-off between cost and shortage, I normally focus on cost because cost of inventory, cost of carrying, cost of procurement will be more excessively important rather than storage cost. But when I compare both costs, the storage cost and carrying cost, they go hand in hand because how much goods I store, how I store, and what utilization of that store goods is done. Based on that, I can take a call about management of trade-offs. For any business, there are three levels of inventory. Suppose this is my inventory go down, then this will be called as a 100%. This is desired. The 50% is called average. Then we have certain benchmark below which normally we don't like is called as a risky. So normally the management of inventory is done in this period. We can have this, but we try to avoid this. Now, what are the factors they influence current assets? Please read the slide. I'll wait for 2 minutes and then explain the. So the first factor is nature of business. If it is service industry, normally the assets required are less. If it's a production industry, the compared to the service industry, it is required more assets as inventory. If the raw material is seasonal, then stock of my raw material is normally high. Similarly, if the procurement cycle is very tedious and long, then my inventory levels are also high. In case my supply chain has disturbances or lack of reliability and market is very competitive, then my current assets are more because I will be investing funds in current asset more. Now we already talk about working capital. Let's talk about three concepts of working capital: gross, net, and average. The gross working capital is the value of all the assets held by organization. So it is current assets minus current liabilities and the funds available. So along with current asset, current liability, it involves all other short-term assets and short-term liabilities for calculation. In net working capital, I only focus on current assets and current liability. I'm not involved any other supplementary obligations or gain for working capital. Then there is something called as liquidity strength indicator. By approaching and calculating various formulas, we can ascertain the liquidity and efficiency of firm, and we can decide optimum working capital. So, in conclusion, managing of current assets is a strategic decision. If I have short storage and optimum supply chain, then my inventory will be less. Whatever the extra money I'm locking in inventory, I can divert for investment and more return purpose, and I can make my firm more competitive. So I need to understand inventory management more effectively and plan its all applications so that the funds allocation and utilization will be more effective. Please read the slide. If any doubt, you can post it in chat box. Any doubts? So let's move to new topic. So we understood about working capital. We understood about inventory. We understood about importance of working capital in inventory. Let's talk about the role of working capital in actual industry. Okay. So I purposefully skip the part about working capital, its meaning, optimization, because it is repetition. So let's talk about what are the obstacles for business. There are three obstacles. One, scarce resources and lack of negotiation powers. Second, I can have cash flow, but flow of cash cannot be directly controlled, and there might be having complex or operational issues about inventory. So first, let me explain what is inflation. Okay, it's almost 7, so we are about to end the session. So what I'll do, I'll just revise the thing and I'll further discuss this. Let me show what we're going to discuss. We're going to first discuss about inflation, depression, and role of working capital. Then we are going to talk about strategies optimizing working capital. Then we will study real world examples and their strategies. So today what we learn is working capital. Working capital is difference between current assets and current liability. Working capital can be positive if I have extra current assets or current liability. Working capital is negative when I have shortage of funds over my current assets. Working capital helps for better management of operational efficiency and avoids burden on external sources. So if I'm managing my working capital efficiently, then I can get cost-effective production cycle, which is always good for my organization betterment. Working capital study involves study of various components of current assets and current liabilities and their real world impacts making changes. So considering this, for a finance student, understanding working capital is most essential. So that's all for today. If any doubt, you can post it chat box. Otherwise, if nothing is there, in 2 minutes, I will close the meeting. Just 1 minute, I'm waiting. If any doubt, please post in chat box. Okay. So I guess there is no doubt. So thank you all of you for being part of this session. Tomorrow again in the morning, we'll continue working capital. After I finish this unit, we will discuss numerical illustrations either by video or YouTube channel. And then on one Sunday or Saturday, all of you need to come to college and we can illustrate the working capital and all other numericals. So thank you all of you. Now you can leave the meeting.